So let's admit it, boom 300 and crash 300, of all the boom and crash series, these are the two that have got the most money, and everyone wants a piece of that pie. And so how can we actually make money from boom trading boom 300 or crash 300? So this actually works on both, but usually mainly for me, I usually trade boom 300 because it's a little bit fair, unlike crash 300. But this actually works for both of them, right? So what I'm this is actually what I usually teach, what I usually show you guys, right? So first of all, it's just simple price action, but as we know, price action alone isn't able to cut it, because anyone could be making money if you just stick trend lines and support and resistance. Anyone could be making money first of all, and that is not enough. Why? Because as you can see over here, if you just depend on trend lines and support and resistance alone, you won't be able to get entries. Why? Because as you can see over here, if we mark this over here, mark this over here, imagine how long it took for us to wait for these entries over here. So simply it's just not able to cut it. It's not enough to trade or using price action alone, because you end up being frustrated. Imagine this move and you're not even in a single trade, right? So let me show you how I trade boom 300 and crash 300. All right, so first of all, I'm just going to be showing you the price action side of it, right? Because price action is the investor, is the key. I won't never leave price action. Why? Because it's actually the best, right? So even if you use the price action alone, if you're patient, right, price action alone is enough. It's quite enough, right? So price action, what do you have to use? Right, over here, as for me, mainly I use my order blocks, right, my trend lines, and my zone flips or support and resistance. But usually I mark zone flips. Why? Because support and resistance, I usually don't trade reversal patterns, right? But they also work, right? For reversal patterns, that's where I mainly use what? That's where I mainly use order blocks, right? So, or support and resistance, right? I think everyone knows what support and resistance is, so I'm not going to be delving much into support and resistance. Rather, I usually like to talk about zone flips, right? So zone flips, or let's say in a downtrend, just like this case over here, right? When the market pulls back, this was a support area over here, right? And when a support area gets broken, this broken support is now acting as what? As a resistance, right? So when the market pulls back to that area, we're going to be looking for our selling opportunities. It doesn't mean that market has pulled back exactly at this point. It can come a little bit below or slightly above, right? But let's just take, for example, that it comes exactly to this point, right? Continues going down. We are going to be looking for another opportunity when it comes back to this area again. That's just what we do, or that's just what we look for, right? And over here on this, what we'll be marking, this is where we'll be marking what? Our support and resistance levels, our zone flips, right? So over here, the pullback that you want to look for usually, though these don't come all the time, is a pullback. On this pullback, what you want to see is a consolidating manner, like so. If you get a consolidating manner like this, they know that you are in for a sweet spot, right? So what we want to see is an impulsive move, pullback in a consolidating manner, right? Another impulsive move, same as for this correction over here, right? So impulse, we want to look for an impulse correction, another impulse. That's what we'll be aiming for, right? So this is just the basic on what on support and resistance, and then for trend lines, is just normal trend line, drawing normal trend lines, and then if we get a breakout, we also trade what those breakouts, right? So trend lines, I'm not going to be jumping much into that, but if you want more about price action, there's a video I posted. Is It's a full. I think if you type in full beginner guide to price action, it will show you what I look for when I'm trading price action, right? So it goes much deeper into this, right? Though it says beginner, but it actually goes much deeper, right? So this is not enough apparently, right? We're not able to get what much into, because as you can see, when boom and crash, when boom starts moving, what or when it starts moving, right, it can leave you, right, and you won't get another chance to enter again, right? Unlike boom 500, which happens to be my favorite, I usually like boom 500. Boom 500 gives us more pullbacks, right? And remember, a pullback is another chance to get what? Is another chance to get an entry. So if market spikes or if it pulls back when you're in a trade, remember that is a chance for you to add more positions or what? To add more positions, right? So what I want to do on this chart is we're going to be adding moving averages, right? So in this case, we're just going to be adding moving average, nothing more, nothing less, right? So let's drop down to our lower time frame first. Because first of all, we analyze where the trend is going, right? So after knowing where the trend is going, now we drop down to our what? To our lower time frames, because we want to get what? Those smaller time frame entries, right? So over here, what we're going to be, the moving averages that we're going to be using, let me just add them as moving averages. Right, so first of all, we've got we're going to be using the 50 and the 200 moving averages. Those are the two moving averages that we're going to be using, right? Those two alone, right? So what I want to look for over here is a pullback. So let's say like this case over here, right? We're in a downtrend, right? So what we're going to be looking for is if the 50 and 200 cross over here, right? So the 50 moving average is the black one, and the 200 is this one, is this paper one, and those are exponential moving averages applied to close if you want to add them, right? So these are the two moving averages that we can be using, right? So over here I've got crossover, right? So after our crossover, what we're going to be looking for is a pullback to the 50 moving average or the 200 moving averages, right? So when the market pulls back to the 50 moving average, just one leg, if it just touches over here and you get a candlestick confirmation, we can take our trades, right? Then right over here, as you can see, when the market pulls back over here, right, it breaks out of this 50 moving average. So in this case, we're not going to be looking for our entries for our sale opportunities. Why? Because we've broken past the 50 moving average, and we're going up. And when it comes to test this 50 moving average for a buy, we're also not going to be entering. Why? Because our 50 200 is crossed for a sell. So we're not going to be looking for our buying opportunities in this case over here, right? So let's go back a little bit, right? So over here, as you can see, we've got 50 200 cross over here. We get an entry when the market pulls back to the 50 moving average, right? Over here it breaks past it, right? So we don't look over here, right? Then we break below again. We got pull back, we enter, right? Pull back to the 50, creating a small L, right? So like a head and shoulder pattern, because we've got this shoulder, head, and another shoulder over here. We take our selling opportunities, right? Then over here, this is when the market pulls back to the 200 moving average, right? So this is where the trick comes, right? When the market pulls back to the 200 moving average, like this over here, right? We don't enter on the first leg, right? We wait for it to pull back the second leg, right? So this over here, this is like an M over here, why? Because we've got first leg over here, right? Neckline breaking this over here, right? So we've got the neckline, this is the second leg over here, and we take that sell opportunity, right? So that's what we want to look for when the market pulls back to the 50 moving average, to the 200 moving average. When it pulls back to the 200 moving average, you have to look for an M or a W pattern, right? So over here, as you can see, 50 200 cross, right? Pull back to the 50, right? Though this was ranging a little bit, but pull back to the 50, and we were just entering, and we didn't take any loss over here. Just like any strategy, this also takes loss, right? So you have to practice it out first on demo before you do it, before you take your entries, right? So over here, so this is a pullback to the 200 moving average, right? So in this case, we actually have a triple top, or so like a head and shoulder, right? But this is what we want to look for, right? We just don't wait for one leg when it comes to the 200 moving average. If it comes to the 200 moving average, you have to wait for the second leg, right? Then over here, it doesn't pull back quite enough to the 50 moving average, but that's just how simple you can get these entries, right? So right here, first leg and second leg, you take your entries over here, 50 moving average, 50 moving average. So this trick actually mainly works on the 5 minute, right? On the 15-minute time frame, we don't usually get more entries, right? So on the 5 minute time frame, that's where we get most of our entries, right? Though the 15-minute time frame actually also works, but as you can see, it works over here. This one didn't give us candlestick confirmation, it broke past, right? But we get what fewer entries on the 15-minute time frame. But if we get those entries, they're actually long term, right? So we get an entry of a year, right? 200 moving average consolidation, and we what enter either on the breakout of what of this trend line over a year, right? So it's actually very simple, right? So you can actually start trying this on demo first before what before going live with it, right? So that's it for this video, guys. If you found it helpful, like, subscribe, and share the content, right? So that's it. Peace.